Joining us to unpack that market action is Nick Kunze from Sanlam Private Wealth. Nick, a happy Friday to you. Thank you so much for your time today.
Yeah, good afternoon. Happy Friday.
Well, it's been quite a week. I would say maybe a bit quiet on the market side, but a big one politically. And of course, that's had an impact on markets somewhat. I'm just keen to get your thoughts on what we've had to contend with over the week and what might we be seeing today.
So yeah, you're right. I mean, it was a little bit quiet yesterday, obviously, with the European, the US holiday with Independence Day, and obviously the British going to vote as well. So things were a little bit on the quiet front, but pretty eventful for us in South Africa. You know, after a slow sort of Monday, Tuesday, things really got going. The rand strengthened nicely. I haven't seen the exact where we are sort of week to date, but I think a nice, decent week for the equity markets as well. And closing, pretty much near a 52-week high, hopefully by 5 o'clock today. So we'll take the positives. It was a positive week, I think, generally all around for SA.
I do see that the FTSE 100 is up 0.27% today. Of course, we had those votes being counted overnight. Let's talk about the new dawn that the UK now faces and that how might affect market sentiments.
Yeah, I mean, a real, shock is no other way to put it. We did know that Labour were going to come in and the Conservatives were going to go out. Quite the size of the sort of the trumping that the Conservatives got, it's quite extraordinary. Labour in effectively a landslide. So a new Labour government, obviously a little bit more left-leaning. I mean, not the Labour of old as we remember. They're a little bit more centralist. They're not just the old-fashioned Workers' Party that they used to be, but nevertheless, new change in the UK, new government coming in is going to be a little bit more of a socialist sort of a feel about it. Let's see where that takes us. And obviously, we've got France this weekend too, and they're going completely the other way. You know, they're going effectively far right. So very diverging views on the political space within the European Northern Hemisphere the next sort of a couple of hours.
Of course, Nick, we knew this would be a heavy election year. What we are also seeing in the United States, I think an important one for Africa specifically also is the possibility that Joe Biden may pull out of the race. There's pressure coming from some corners of the Democrats there. Is it something markets are just sitting back and watching or possibly reacting to?
No, I think the latter. I think it is a bit of a reaction. Those who obviously weren't aware of it, you've been missing in action, but huge. The debate on Thursday, we're still feeling the ramifications a week later from Mr. Biden and Mr. Trump's debate. As you pointed out in your intro there, more likely that Mr. Joe Biden will have to at least concede and step down and find someone else. They had 2 months to go till they host their sort of conference, and of course the US elections happening in November. So half a year away. Are we feeling the ramifications? Definitely. Bond yields have been ticking up in America. There's been a bit of a risk-off feel about things. In fact, we've seen a little bit of a weaker dollar the last few days too. And I would argue that that's all the effects of what we saw in that debate on late or early hours of Friday morning.
What we also have seen is a steady increase in that Brent price. I think it's around $87 a barrel there. It's been a quiet but steady increase. I'm keen to get your thoughts here on what could be driving that at this time.
Yeah, oil, as you said, slowly creeping up. I mean, up about 6% in the last week or so. I think still a little bit of geopolitical risk to the fore in the Middle East. There's a little bit of nerves around that, and typically oil tends to run reasonably hard in the sort of the American holiday period, what they call their driving season, with Independence Day. Most people heading out to the countryside and to the Hamptons and all the rest of it. So you do get a little bit of a pop in the price of West Texas in America and Brent, which is the global benchmark. So that's still happening too. And I guess to a certain extent, the world's biggest consumer, which is America, the economy is still doing reasonably well. We need to see a bit of a weaker jobless number, which will be this afternoon, sort of 2:30 South Africa time. If that comes in a little bit weaker, then maybe we'll get a pullback in oil. But oil slowly creeping ever higher towards $90.
And then, of course, the one we won't stop talking about because we literally cannot, inflation. We did see Jerome Powell out at Sintra this week making some commentary. Markets are optimistic again about a September cut. Nick, I just want to get your thoughts on this one because I do feel like markets keep sending themselves down a barrel, and then we have some sort of a rally and then it's a sell-off. Really is lots of volatility.
Yeah, it is. It's such a difficult one to forecast. A lot of the data we do receive from the American markets are a little bit backward looking. They're not, sort of up to date as we would like. They're normally a month or two behind. But inflation, nevertheless, has been coming down quite significantly. Not quite at that 2% level that Mr. Powell and his team would like to see, but nevertheless edging ever closer. And then, of course, we've had some other data out of the US, which is this week alone. A little bit of a rollover in the manufacturing data, softening a bit, a little pullback in the ISM numbers. So American market clearly slowing, which does feed well into your inflation story. And you'd hope that the Federal Reserve would be looking at this, if we, as I said, get a weaker jobless number today, that certainly sets up the case and the likelihood that we're going to get our first rate cut in America in September.
Then we also saw Asian markets rallying quite strongly overnight. Keen just to get your thoughts on that. Could it be a reaction to some of the issues that we've spoken about this afternoon?
I think there's a little bit of that, but there's also the tech market still continuing to be the main drivers of those US markets. The Magnificent Seven. We had a very, very strong week this week from Tesla that hasn't been participating in the big bounce like NVIDIA, Google, Amazon, Microsoft has kind of been left a little bit behind, but Tesla getting its chance to play a little bit of a catch up this week. I think about 12-13% higher after they came out with updated sort of sales numbers on the Tesla vehicles. That was yesterday, so that stock contributing as well. And then to your point, we've seen that sort of follow through to Asian markets this morning. Electric vehicle makers, BYD, etc., were strong drivers this morning. And also that tech space, we had a trading update from Samsung, which was very, very well received too. So all in all, that tech market, driving us higher as well.
A huge macro focus this afternoon, Nick, but I'm keen to get into stock picks. Let's start off by taking a look at counters that have found favor with your industry peers.
I'll just take a nice punt on Sasol. I know the share price has gone up a little bit in the last short while, not a lot compared to where it's come from. But if there's global economic growth, chemical prices will go up. Sasol's very geared to chemical prices. The oil price will go up, but the rand will also strengthen, if I'm right, in the commodity cycle. So they won't be, benefit too much from oil. But, can things get any worse for Sasol? And certainly when you look at the share price, this thing's trading at incredibly low valuations. This is of the lowest I've ever seen a Sasol, if not the lowest rating by the markets.
I still think that South African banks is a good way to play the economic recovery in South Africa. So I'm picking Standard Bank tonight. It had a fantastic year last year. I really shot the lights out. Earnings grew by 27%. The Standard Bank Africa business had a really good year, plus had the weaker rand, so they had that additional benefit. This year, the earnings growth are going to look more subdued, rand strength, but 65% of their business is still South Africa, and they will benefit a lot if this economy can go from a 0.5% real GDP growth rate to a 2%, or even, if we can dream a bit, even higher than that.
Something I wouldn't necessarily buy today, it is the iShares Semiconductor Index. The share code is SOXX. If you have kind of missed the NVIDIA bubble, this is a nice way to access that whole semiconductor sector. This ETF does have 8% in NVIDIA, but it's also got 4% in Taiwan Semiconductors. It's got AMD and all of those other things as well. Be cautious about buying it now because it is a very, very cyclical sector, and with the sector very hot at the moment, leading up to the US elections, you might get better opportunities to buy it. But it is a nice sector to access that semiconductor sector in a more diverse way.
All right, Nick, keen to get your thoughts on some of those counters. We've got Sasol, Standard Bank, as well as that iShares Semiconductor ETF.
So, I mean, just the ones I would be a little bit hesitant would be diving into Sasol. I share the views though that it's very, very cheap. The problem is it's still hasn't found favor with the likes, with the level of emissions that it kicks out, etc. So I'd be a little bit cautious with Sasol. Standard Bank story I like. I share these thoughts. I think if you want to take a bet on SA bouncing back, getting back to some reasonable growth levels, financials tend to lead markets up and they tend to lead markets down. So I would actually share. I think Sasol's probably not a bad call. Still also trading on single-digit P's. I think just under about 8.5 P, and a dividend yield close on 7%. So yeah, I think Standard Bank would be a good call to play this Ramaphoria Part 2 bounce back, as they're calling it.
And with that said, which counter are you loving this afternoon, Nick?
So slightly different, still the SA story though, but we're looking at South African government bonds that we're buying at the moment, still offering some pretty good value. If you're not quite sure exactly what particular stock pick you like, I think something like an SA government bonds has taken a broader view on that SA positive story. And with this rand looking like it's going to break below 18, the government bonds and the fixed income market should benefit quite nicely.
Brilliant. Always a pleasure speaking to you, Nick. Thank you so much for your time this afternoon. That was your midday markets update with Sanlam Private Wealth, Nick Kunze.